When you're looking to purchase an investment property, it is absolutely crucial that you identify the right suburb. Now, in today's video, myself and Ben are going to take you through 10 key performance indicators that we look at in every single suburb to identify whether or not it's worth investing in. Now, as investors, myself and Ben are absolutely obsessed with the long-term return on our investment. And ideally, we're just looking to generate the most capital growth that we possibly can. So one of the reasons that we like to really dive deep into this data when it comes to the suburb level is the potential difference between just maybe a 4% return over a 15-year period versus 6% return. Now, can you explain the value of that a little bit more so we can get more context at the suburb level?
You know, I remember the first time we opened up a compound growth calculator, and I feel like I've opened these up at least 3 times a week for the last 6 years now. But when we put in a 600K property that we hold for the next 15 years at 4% per annum, the result of that property or the value is going to be about the $1,080,000 mark, which is an exceptional return in itself.
Yeah, you take it.
But as we go further from there, if we look at a 600K property that we hold for the next 15 years and it gets a 6% return per annum averaged out, which means a 2% better return per annum, the value of that property at the end of the 15 years is now $1,437K. So we're talking about over $300,000 better off on the 600K property by just making one decision. That's why when we started to look at this stuff, we started to take it a lot more seriously, and there's some absolute gold in the rest of the video in terms of how you can find that extra couple of percent per annum.
It's the same amount of money over the same amount of time. If we can, it would be great to get that. And we've seen it down there in Sydney happen where one suburb will perform really well due to a number of different factors versus a different suburb as well. So when we're analysing a suburb, the first things that we're going to look into is the previous performance of that particular market. Now, for us, we're going to look at 3 different longer term averages. We'll look at the 10-year performance, we'll look at the 3-year performance and the 12-month performance. Now, for us, we really like to invest in suburbs that have underperformed over the last 10 years because it means that you're not buying that suburb at the top of its cycle and it may have some legs or some future growth potential. But then you're looking at the 3-year performance and hoping to see those percentages come up a little bit higher as well because it's finally started to hit its stride. And then when you're looking at that 12-month performance, you want to see that, you know, starting to perform quite well also because it means that people are starting to look into that area, starting to get excited because it's underperformed over the longer term, it's affordable, you can get a really good property at a really good price.
You know, one of the things that we love, right, is when we looked back at Homely's data over 50 years almost in Australia, we found out that Sydney, Melbourne and Brisbane had all averaged around about that 9.5 to 9.7% mark over time when you looked at the total data divided by the number of years. And then from there, when we started to look at 200 or 300 suburbs in each market across the indicators that we look at as a business, we found that there's some suburbs in Brisbane that have literally done 10% per year over the last 10 years and they've doubled. And then you can buy just down the road 10 Ks away and there's suburbs that have literally only gone up by 2, maybe 3% per annum. So if you understand the long-term history and you find a suburb that's underperformed, there's a very, very high chance, according to Jeremy Shepherd from DSR, of performance over the 10 years after that.
It has just started coming down up here on the sunny coast, hasn't it?
It's pissing down again every time we film at the moment.
I know, hey, it's non-stop, but we'll continue through anyway. We'll persevere. Hopefully the sound quality is still good for everybody. But the next thing that we love to look at is the DSR score. This was something that Jeremy Shepherd actually created a long time ago. And it essentially means your demand to supply ratio. So it looks at a number of different metrics to spit out a number between 0 and 100. And it just gives you a bit of an understanding as to how hot a particular suburb is at any given time. Now, for us as a business, we're always looking for suburbs that have a DSR sitting somewhere between about 55 and 80, because it means that it's sitting right in the sweet spot. There is some demand in the market, but it's not too hot at the moment. And you can still see some really good opportunities out there without having to pay a crazy premium price for it.
On top of that, we look at vacancy rates, which according to SQM research at the moment, are at the lowest point in almost 50 years in Australia.
Wow.
Basically, every capital city but Sydney and Melbourne at the moment are sitting below 1%. But when you actually reduce it to the suburb level, again, you can type in rental vacancy rate plus Manly.
Yeah.
And if the number is below 2%, you know that there's an undersupply of property for rent. If the number's below 1%, you know it is chronically undersupplied and rents are going up quite quickly in that area.
Now, the next thing to look at is the average household income for that particular suburb. Once again, Google is an amazing platform for us. There's so much information for free on there. I think the ABS produces their information on there so you can see what the average household income is for any particular suburb. Now, the reason that we look at incomes is it just gives you a general understanding as to the quality of the demographics that live within the suburb. Now, if the average household income is higher, obviously they've got more ability to afford to buy homes in that area and afford to pay for the rent as well. But then on top of looking at the incomes, you're also looking at the split between the owner-occupiers versus renters, which is online as well. Now, in an ideal world, you obviously want more people that own their homes in that suburb and less people that rent. Now, depending on your strategy, depending on the purchase price, we like to buy in suburbs anywhere between 10% renters to potentially 40% renters. So a good little split there.
You know, and then we get down to like the other things that are important, like infrastructure, quality schools, as well as suburbs that are gentrifying. If we talk about infrastructure first, there's obviously the existing established infrastructure like good roads, nice wide streets, train stations, shopping centres, hospitals, universities, and those sorts of things, which are all important. But then there's the coming infrastructure, and I've observed this in both Sydney, Melbourne, and now Brisbane. A few years back, there was a suburb called Redcliffe on the beaches of North Brisbane. There was a proposal for a train line. That proposal had been in place for 120 years, apparently. They finally got around to doing it, and in 2016 or 17, it opened up. In the 2 years before it opened and the year after, prices literally went up by an extra 30% compared to suburbs around it. So infrastructure that's coming in, especially around things like the Olympic Games or the underground metro in Brisbane at the moment, or the train stations and main roads that are being upgraded, can be a huge thing. I talk to people in Sydney, people are still speculating, is it Blacktown where the second airport's going in, or something like that?
Yeah, Blacktown, Parramatta.
Parramatta's got the second CBD going in. Ipswich in Brisbane has the second CBD. So if you know where these pieces of infrastructure are going in and you buy before, which is when the early gains around infrastructure are made, that can be brilliant. On top of that, school districts are super important to some families, mine included. I've got a lot of friends that live in the area that I live in purely because the 3 best schools in the Sunshine Coast are within 5Ks. It normally attracts higher income earners because the better schools are normally the more expensive ones, and you know, the professionals or the business owners want their kids to go to the better schools. I don't personally buy into a lot of that hype. Like, I'm not a massive, like, you need to go to the best school in Australia to become the best version of yourself. In fact, I think like a bit of grime's good for you. But each to their own. When we're looking at some of the areas in South, West, North, Central Brisbane at the moment that we're buying in, we have absolutely looked at every school. We've mapped it in Brisbane, and then we've gone for the suburbs strategically that have the better schools. And then gentrification. So that's more of a gut feel, intuitive thing.
Yeah.
As you're driving around the suburb, looking for houses being renovated, looking for knockdown rebuilds, looking for places that look really, really shitty. Like, I love the suburbs where you see the old beach shack or the old brick and tile in Sydney or Melbourne, and then next to it is this absolute palace. And you're like, well, that's the new future norm. 15 years, everything's going to look like this. Yeah,
you can really use that gentrification to your advantage, because a lot of the suburbs, it still might have a stigma about them, are still super affordable. So you can get into those suburbs at a lower debt level, at a lower entry price. It generally has a stronger rental yield, and then that gentrification will feed into it. And a good example of that is also around the Redcliffe Peninsula up in northeast Brisbane, because 10 years ago, it was a little bit of a ghetto, right?
It was a full ghetto.
You know, it wasn't the nicest area to be living. Lots of renters, lots of public housing, but the fundamentals of that pocket of Brisbane are beautiful. Lifestyle factors, proximity to the CBD, walkability, all of these things were really, really good. And people notice that. Now, a lot of people are moving into the areas, and if you're looking at those streets closer to the water, a lot of knockdown rebuilds, a lot of new renovations, a lot of new duplexes, things like this, and it's starting to change the feel of that area. And we're starting to see it down in South Brisbane now as well, these areas around Logan that have had a real stigma about them. Some of them still really bad areas, but you look at some of these neighbouring suburbs and a lot of house-proud people. You know, you go into some of the suburbs down there and they just love living there and they're really proud to live there, but they've still got the stigma and they've still got the lower house prices.
You know, I love it. Like when I was getting started in Sydney, I think I bought my second property when I was 24 or 25 down there. And I got this great little suburb report from a company called Residex. I don't think they're making them as well anymore as they used to. But basically, there was a suburb on the Central Coast called Gosford that at that time was already super nice. And then there were all of these suburbs away from it that were like half, a third, a quarter of the price. And I could see past like where the suburb was at that time, which was pretty rough, to where it could be because of the neighbouring suburb. And over the 5 years after that, the price almost tripled on that property. So you can not just drive around a suburb and get a sense, but if it's situated right next to beautiful suburbs or beautiful parts of a city or on the water, then there's a high chance over time that, especially if it's on the east coast of Australia, there's going to be gains.
Now, these are some great key performance indicators to look at when you are identifying the right suburb. We also cross-check the suburbs that we like to invest in for ourselves and our clients at Pumped On Property, with another 20 to 30 other key performance indicators to help us understand more about the suburb and whether or not we should be investing into that particular area. Now, if you're thinking about purchasing an investment property and you're really struggling at the suburb level, then we would love to offer you a free one-on-one strategy session where we can talk about exactly where you're at right now, where you're looking to be in the future. We can expand on some of these key performance indicators, and you can take that information and go and absolutely crush it yourself, or you can become one of the small clients that we work with each month, and we can help you identify the right strategy, we can help you identify the right suburb, and safely purchase an investment property in that area. Either way, we wish you all the best, and I hope you've enjoyed this video.
Woo! That's a wrap. That's a wrap.
Getting cool, bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.